Welcome to RMB Africa Focus Season 5, a dedicated series that focuses on Africa's economic resilience and strategic role in global economies. Over the coming weeks, we will explore how the African continent can sustain momentum, leverage opportunities, and remain competitive in these very uncertain times. The long-standing economic story between Africa and China, often dismissed as a simple exchange of raw materials for finished goods, is approaching a fundamental shift. The adoption of zero tariffs on exports from more than 50 African nations into China will disrupt the commercial landscape as we know it. This is a relationship reset. And for more on this, I'm in conversation with Erwin, RMB CEO in China. Hi, Erwin, all the way from Beijing. It's a big moment for Africa. Talk to us about this zero tariff that I do think, as you pointed out, will provide us here in Africa with the commercial oxygen we so much need for the continent. In your opinion, Erwin, what does it mean for Africa? And is this the relationship reset we so much need?
Thank you very much, Crystal. As you mentioned, from the 1st of May this year now, African exports really across the African continent now can enter into China, one of the largest consumer markets in the world, basically tax-free. No more taxes. Previously, when you had to export into China, you could look at the tariffs, anything between 8 to 15% on various commodities, various goods, etc. So now it's tax-free. So now what it really does is it creates this amazing opportunity now for Chinese to import much cheaper goods from Africa. It's Africa's chance. You mentioned a reset. I would call it Africa China 2.0, the next stage, the evolution of the next stage in terms of relationships between China and Africa. So it's been huge. From day one, we already saw a change. We already saw on the 1st of May around 24 tons of apples being exported from South Africa, clearing in the customs section there in Shenzhen on the 1st of May, really taking advantage of these zero tariffs. And what does it mean? Actually, the importer saved around 50,000 Rand just on that one consignment of imports. It wasn't just South Africa as well. We saw over 500 tons of other Egyptian citrus also clear the customs and ports in Shenzhen on the same day. We saw avocados being exported or being imported from China, from Kenya, also clearing on the port on the first day. So it's not just talk. This 8 to 15% savings is real. And what does it impact? It makes things cheaper. It makes demand more. And hopefully then it will have a huge impact in terms of Africa's exports into China.
So, in essence, it's really a game changer for the continent.
Absolutely. Absolutely. Because now what happens is that we can now export on scale. We have to develop the capacity now to be able to export on scale. So that's another wonderful opportunity. We have an opportunity to go into one of the largest consumer markets in the world. And I dare say that it's an opportunity that has not been experienced by the African continent ever before. So we need to take advantage of it. And I think it's a great opportunity.
And one of those opportunities, Erwin, is of course the green energy transition. We know China's domestic shift toward electric vehicles and renewable infrastructure is immense. Talk to us about how China is going about this transition, given the lack of critical minerals, which of course here in Africa we do have.
Yeah, 100%. So China's demand for this green energy and minerals and resources stems from the fact that it has invested a lot over the many years around this green energy. And and this year already, over half of China's installed energy capacity now comes from renewable energy, the wind farms, the solar panels, water, etc., around that. And with this change and with this increase in demand in terms of its energy mix, and you mentioned the vehicles as well, the EV vehicles, there then becomes a natural demand for the resources and the critical minerals. So Africa, as you rightly mentioned, supplies a lot of that. It supplies one of the world's largest supply of cobalt, manganese, copper, and what this now becomes is for China in securing not just buying commodities on spot, but really supplying and securing the supply chain across it. And now, how does this come into the story with the tariffs? Well, now, with removing of these tariffs, it becomes even more commercially viable now to send the goods across. But this is the key, and this is the opportunity, is that with these zero tariffs, it now potentially makes it more viable for Africa to now export processed goods into China. Things that we have been talking a lot about, and not just the raw ore over there now. So this effectively now creates that opportunity for African corporates, for African businesses now to take advantage of this price differential.
And talk of advantages, Erwin, how can Africa use the opportunity, especially around the establishment of smelting and processing plants on African soil? How can that take place?
Yes. So as with the zero tariffs now, basically now African product can now enter into China duty-free. We have an advantage because some of the other countries around the world will still face those type of tariffs. So now Africa has a pricing advantage that it didn't have before the 1st of May 2026. So now when you have this higher potential, this higher price that you can do with a lower cost, the market now becomes attractive for African exporters. We'll be able to get more investment in, we will be able to invest in the smelters, refineries, processing plants, etc., because they now become more bankable than ever before.
Talking about attractiveness, Erwin, as a follow-up point, we know the reality is one of the major bottlenecks we have in Africa remains inadequate infrastructure. How do you think can China and Africa manage these challenges, especially around infrastructure?
So the key with infrastructure is how you put it together. In the past, infrastructure was built in these silos. So as an example, you try build a smelter, but the smelter can't operate effectively without power. The smelter can't operate effectively if you cannot export your processed goods without the rail, without the capacity, without the ports, really linking all of that. So now how Africa can partner really with China is around this infrastructure development that links all these pieces together. We need to be able to link the power, the infrastructure, the smelters, the refineries, etc., get it onto the rail that goes to the port, and then the offtake on the other side. That's when it all works. And now, as I said, with the tariffs, you've just got a better margin now and a better ability now to invest, to make it make sense for you to develop and invest in that type of system across that, and really connecting all these infrastructure and businesses together so that you have this nice supply chain that can now take advantage of this price.
And so again, different opportunities arising and being able to benefit from this new tariff deal.
Absolutely, absolutely. I think it really is a difference, and that's why I said this is a real upgrade to China Africa 2.0. We're not starting from scratch. We're building on something. It's creating this opportunity, and it really is a wonderful opportunity, but an opportunity that must not be wasted, an opportunity that we need to take advantage of.
So the reality, though, is we know that several African nations, and here I would refer to Zambia and Ethiopia in particular, have and they owe quite a significant amount of debt, which of course is a major concern to China. And of course, I think there's been a lot of anxiety around it. And the country, we could say, in terms of they're becoming quite risk conscious. But talk to us and share with us some of your insights and knowledge at how China is looking at local banks to share that risk.
Absolutely. So contrary to perhaps popular belief where Chinese banks and China, and I must highlight that Chinese banks operate independently to a major extent. They have their own KPIs, they have their own risk views, etc. And a lot of them that we are dealing with, the likes of China Development Bank, China Exim Bank, Export-Import Bank, they are definitely worried about risk. They are definitely worried about the management of risk. There is a key difference, though, is that they do have a longer perspective in terms of funding a project, where a lot of the commercial banks look at a shorter tenor in terms of that. They can look at a longer time frame around that, but it doesn't mean that they're risk averse. In actual fact, they definitely don't want to lose money. They definitely want to be able to create a sustainable environment where countries are able to pay them back, projects are able to pay them back. And this is where local banks can actually play a very important role. Banks like ourselves, they come and talk to us. We understand the local environment. We understand the local economic conditions. So we're able then to share our ideas, share our risk principles, share the views in terms of the economy and how things can potentially work in terms of not de-risking completely, but advising on how we could better manage the risk and to create a real sustainable financial environment for them to be able to support this growth in Africa, which is ultimately what the funds are really made for.
And then lastly, Erwin, you are the CEO of RMB in China. You are on the ground. You get to engage with different businesses, government, etc. Talk to us about RMB's role in contributing to this relationship reset between China and Africa.
Absolutely. So as you mentioned, we're on the ground here in China. We talk to our Chinese corporates and our Chinese clients, and we really assist them going into Africa. And it's really assisting them to connect the dots with all these various opportunities that we see. RMB is experienced in Africa. We have on the ground people that understand the local environment, that understand the local economy, understand local legislation, and how things can fit together. We have expertise across different sectors, in terms of which I mentioned that you need to connect the dots. You've got different pieces of the puzzle, from infrastructure to mining to trade. And we are able to put this all together so that you can get the complete value chain, the complete system that enables a win-win relationship, not only for the clients that are coming into Africa to invest, but something that benefits the longevity, the sustainability of this model of being able to beneficiate, to create better value for Africa, and ultimately impact and have a better result for the people across Africa.
Thank you so much, Erwin, for your insights and explaining to us this significant moment for the continent.
Thank you very much for having me, Crystal.